HPL Electric and Power, which posted strong set of earnings in the fourth quarter. Well, the company's profit rose by about 74% on year-on-year basis. We're joined by Gautam Seth, Joint Managing Director of HPL Electric and Power, now to help us decode the numbers. Hi, sir. Thanks a lot for joining us today. Tell us what led to the growth in the quarter gone by. The major segment for you all is metering. Quarter 4 performance, was it a one-off? Or tell us for the entire year, what sort of growth numbers did you register and what's the run rate that you expect now going into FY20?
Yeah, last year we had a overall growth of 12% in revenues, and in our EBITDA we had 22%, and the net profit, the PAT going up by 19%. And the Q4 was a very strong quarter where we did 352 crores, and with again a strong growth coming almost 37% in metering and 30% in lighting. If you see our numbers, end of the fourth quarter, we have been sitting on a strong order book of 575 crores. And so this is something what is giving us a strong execution in metering. If you go back last 3 quarters, we have been having a strong execution as well as a very strong pipeline of actual order book, and the inquiries what remain in the market currently are of over 2 million meters. So overall, the biggest segment of HPL, almost 50% of it is today metering. So that is witnessing a strong growth going in the last couple of quarters and even as we go ahead. Just to bring some more light to our last year results, we had earlier projected a double-digit growth, and which we were able to achieve across all our product segments. We also worked on a lot of cost control initiatives which were quite successful, and also bringing down the working capital cycle. So all these have helped us to enhance our margin as well in the fourth quarter and in the overall in the last year. Going forward, because of the strong order book what we have on the meters, we do see the trend to continue. As I said, the execution is strong, and the inquiry base from various utilities have been quite strong, with over 2 million meters being currently evaluated. So we do see a strong set of numbers on the metering front. With the elections getting over, this would again bring in much more momentum on the metering side from various utilities. So overall, our projection of having again a double-digit growth with certain more improvements happening on the working capital and certain other balance sheet ratios would definitely be maintained in the current year as well.
You mentioned the company has made an effort to improve the working capital cycle. I was coming to that question. If you could tell us what were the receivable days and inventory days, because as an FY18 closing, I think the days were on the higher side, receivable 160 days and inventory days of about 130. How much did they come down by the end of FY19, and what's the target now going into FY20? How much more can you bring it down?
Yeah, so if you look at the receivable days, they were at 165 days earlier, which we have brought it down to 148 days. Now, you must realize that we are today into 2 specific businesses, and both very strong, which are one which is on the metering, which is on the B2B side, more to the utilities, and the other is the B2C, which is on the trade side. So if you break up this 148 days, what we have, there is almost the utility debtor days are much higher. So our efforts, which we have been continuously doing by bringing in the trade finance, the channel financing, or bringing in a better fiscal discipline, has actually helped our figures improve. The more better improvement is on the trade side, where we have been able to bring down our receivable days, which were at one time even at 130 days. Today they are well below 90 days. So there has been a marked improvement. We would expect this effort to continue and a better discipline to come. Although you have to look at the scenario that there is a liquidity issue right now in the trade segment, but nevertheless the kind of work what we are doing and our teams are doing, we should be able to again bring it down further, a better improvement in the receivable days. Coming to the stocks, we had 149 days of stocks, which came down to 130 days. Again, and efforts are going on. There are certain reorganization of our various warehouses, the different CNF agents what we have across the country. So we are looking to somewhere reduce them further so that we are able to streamline our supply chain and thereby reducing the stocks in the system. With an expected growth of in a double-digit growth what we are expecting across all our product lines, and having certain even a marginal improvement in the stocks would overall benefit to us, because the growth would again make those days come down. So definitely there is a lot of work which has happened successfully on the working capital cycle, what we have been able to reduce, and going forward also we expect to further bring it down.
Gautam, the next question was on the balance sheet. Tell us what sort of debt levels is the company sitting on, because your bottom line is being suppressed due to higher finance cost that the company is bearing right now. So what's the total debt? Any repayment schedule that you have in FY20?
Yeah, the net debt is currently at 445 crores, and in fact in the last from the third quarter to the fourth quarter, we have been able to bring it down to some level. But as we are experiencing a good growth coming in, especially on the meters, so I do not see the debt level immediately go down. But the requirements, as I said, that with the lower working capital requirement, the fund requirements would go down, and with the sales going up, the eventual ratios would come down. So if you see on the March level, our debt to equity ratio was at 0.69x, so which was much more healthier than before, and even the EBITDA to interest ratios what we have are all have shown improvements. So in that manner, again the efforts what are going on with the low capex and with a better working capital cycle and a growth coming in with better capacity utilization will again help us to have a better ratio with regard to the debts what are concerned.
Sure. The other major segment besides metering is the switchgear side of the business, which also gives you higher margins, I believe. The revenues for that one were down in the quarter gone by. What's the outlook here?
Yeah, overall, if you see in the last 2 years, our switchgear business has been going up. And at some quarters, we've even had a 30 to 40% growth coming in. So the last quarter was down about 12%, but that was due to certain high base what we had in the last quarter. On an immediate basis, because this quarter or the current time what we are seeing, we have seen certain low consumer demands coming in, and also with the election and the overall scenario what was there. But if you look at the complete year, we again see a growth coming from the last year, a clear double-digit growth what would come in. Also, certain government projects which were earlier going on, which were the last mile connectivity in Saubhagya scheme, which also had given us certain volumes in the last year. They are currently not being executed, but we hope that now with the new government in place, these schemes and these projects would again resume, so which will again help the volumes to come back.
Okay. Gautam, just last question and observation looking at the exchange data. The promoters have been buying from the market, though a very meager amount. I know the promoter stake is on the higher side of about 72, but in the last 2 quarters it's just going up, though with buying very few shares from the open market. Any plans to take the stake to 75% cap as per SEBI mandate?
No, nothing specifically what I can comment on right now, but what I can say is that the promoters have a full trust and a big confidence in the company. Our sector is currently seeing, although on a medium and a long-term basis, this sector is, I would believe, very good. The metering is seeing a very good run in the past 1 year. The future seems to be good. With the new government and a lot of stability happening, We do see a lot of the reforms, what are there in the last mile connectivity in the electrical distribution segment to be very strong, and eventually the consumer demand also rising. So going forward, we do see a good amount of growth coming in our sectors, and with us already having a very strong back end, our own R&D, a very good capacity, we are very well set to utilize those capacities and the opportunities what are coming for us in the future. So overall, as a promoter, we do see a lot of upside in the business going forward.